session for today called Survive to Thrive. All of us as business owners are currently in the midst of a storm, a very severe storm. The difference is the capacity of the boats that we are sailing in. If you understand what I'm trying to say is basically all businesses are in trouble, but some of them are stronger because of their stronger fundamentals or the nature of their business and are able to withstand the storm. Some of us are shaking in the storm and some of us are likely to collapse in the storm. The idea of this session is basically to try and give you some weapons to survive this storm. And to do this, today we have with us Mr. G Ramakrishnan, popularly known as RK, CEO of TechNova. He's an economist at heart, but is doing all kinds of jobs during this storm, as I would like to call it. RK will take us through things which have impacted us and what steps we can take to ensure that even with lower business volume, we still remain relevant and survive so that we come out of this storm ultimately. Because one thing is for sure, whether it takes 3 months, 6 months, or 9 months, demand has to come back. And when that demand comes back, we should be there to meet that demand. And that's the whole purpose of this session today. We will also have a couple of our printer colleagues, owners of printing presses, who are doing something different to survive this. They'll share their experiences with us after RK has finished. And then finally, we'll have a Q&A where all your questions can be put up to RK. On your screens, you will see a Q&A box. Kindly put in your questions in that box and we will take it up one after the other at the end of the session. So without much further delay, over to you, RK, for your session. Thank you.
Thank you. Good evening, all of you. Thank you, Mehul Bhai, Fahim Bhai, Prashant, and all members of BMPA for having me here again. The last one I had a webinar with the BMPA was in July, and I'm delighted to be back here. The last webinar that we had at that time, I think the situation was much grim in the month of July. We were just 4 months into the pandemic and the lockdown. We are now in the 9th month, 8th to 9th month of the pandemic. And I would say at a very high level, I think the situation on the ground at a general economic level is much better than what we were in the month of July. So that's the opening statement I would like to say. And Mehul Bhai, I'm aware of the fact that the commercial print sector has been badly affected. And therefore, whatever I now speak in terms of what I would say as a focus areas for a survival to thrival roadmap in the next 6 months, 12 months, 24 months is something I will keep in mind the background of the commercial print sector. But at an overall economy level, I would just also know that it's much better than what it was in July. And as you rightly said, demand revival will happen. On the general economy, I mean, the overall industry is depending on 2 factors. One is obviously the revival of the economy. And second is whatever behavioral changes that brings in terms of opportunities and threats. So what I'm going to present here today, it is definitely not rocket science. It is general common knowledge and common intelligence that one uses. So common sense. It would be simple, and I would like to aim it at a very simple way of addressing what are the key challenges. You all may be doing many of these already in some parts or in full or a full measure. But what I would try to cover through this is to give a framework or a structure so that we could do it in a much more organized way of how we actually come through whatever actions that we initiate. We already initiated and we will now initiate in the next 6 to 12 months in a much organized manner. So that's what I would like to cover. Broadly, the 2 themes that I've covered here in this presentation. One is essentially what I call as a fiscal health check in terms of what we need to focus on the various elements and the variables. And I would like to say that it is an holistic and an integrated way of looking at it. If we look at it in each one in absolute in isolation, I think it will look easy. I think the problem is that when we take an overall integrated look at various variables, how to balance those variables and come out much stronger and victorious is what the whole real journey is all about. And the second part of it, I have few slides which has been prepared based on our own company perspective as to where the commercial print industry is looking at and what sort of things are there in terms of the trends and what we can do. So these will be the two major themes that I would like to cover. So what I would do is I would now go into my screen. Can I, Mehul, can you see that? Can you see the screen?
Yes, we can.
Am I quite audible?
You're quite audible.
Okay, great. Yeah. So here I go. So basically, I think I've just put down some thoughts. This is not a prescription. This is not a final recommendation. This is some thoughts which I had based on whatever little I am aware of, and I've worked on that. So from that sense, the whole theme is when Fahim Bhai and Mehul Bhai called me, I said the issue is the next 6 months are very critical for the commercial print segment, many segments. I think the first 6 months was critical, but we are entering into a phase where the dust is settling down. And when the dust settles down, you find that there are some permanent damages. And therefore, how does the commercial print sector navigate in the next 6 months to become much stronger in the year 21-22? Okay. So this is just half a minute that I just want to take. This is not the micro one, but I believe that some amount of thing, I will just place it here for half a minute. And then if there are some questions at the end, we could just say. What I would try to mention here is there are some trends which have been there for quite some years now already, except that during the COVID, it is getting much more intensified. What are those trends? I think the overall trend in the world is globalization, maybe even turning into deglobalization. That's one. One major trend which is now happening actually is more than deglobalization, is de-Chinization. And I think that is very evident in terms of in the Western world, in US, even in India. So the de-Chinization is a key mega trend that is going to happen. It's happening now and will play out for the next few years. Financialization of assets. I think again is a major mega trend that was already there, and the huge liquidity flow that has been unleashed post the COVID, post all the stimulus that has been coming from the US and Europe and India will mean financialization of assets. Formalization of Indian economy started many years back, it's been intensifying and it will continue to intensify. Reformation of the Indian economy, and there are some reforms that has taken place in the last half year and which is perhaps going to impact positively, hopefully in the next 3 to 4 years. Digitization of business, again, was something that was happening. This COVID has, if not anything else, it has accelerated the whole thing, perhaps 3 to 5 years ahead of what it was supposed to happen. And polarization of society, that's happening across the world. So these something what I call as macro trends may not impact immediately, but the impact of these macro trends over a decade will be very much felt in India, in the commercial print business and our own companies in whatever degrees or measures. Coming to our topic of what we just say in terms of survive to thrive, I think the key financial issues in a crisis, this I mentioned in the July webinar, but I am repeating it because this is the core. I think there are 3 issues in a financial issues in a crisis. And once again, I just want to mention that the major focus of what I am presenting here is on the financial aspect of how to navigate the organization. There is a strategic, there is a marketing, there is a people-oriented and a manufacturing-oriented aspects that we should handle in a crisis. I am leaving that to more experts to talk upon that. I would actually mainly talk upon the financial issues during this crisis. So as I mentioned, I think it's clear term. We look at it in terms of 3 buckets. The short term, survive. Earlier we said the first 6 months. Now again, the next 6 months is the short term. The midterm is 21, 22, and the long term is over a 3 to 5 year horizon. Again, 3 key issues when we look at from a financial point of view. I think I've just simplified it. One is the impact that it will have on the profit and loss. Second one is the impact that to protect the balance sheet. And the third one, and most important in these times, is aligning and timing and balancing the cash flows. So these are the 3 financial issues in the current crisis that we are in. So what I call as a trinity of the financial statements. So therefore, what it means is, I think in very, very simple terms, not so simplistic, but simple terms, we have to balance the trinity. And I think the focus that we have is on the revenues. And I'm sure that I think people would say it's easier said than done. Revenues today in the commercial print sector may anywhere between 40 to 50 to 60%. And there are some people who might be having at 25 to 30%. So revenue and cost, what can we do on that? Second, what can we do on the asset side that we have? Utilization of assets, underutilization of assets. And what can we do to ensure those are fully utilized, or if not utilized, how can it be disposed of? And obviously the liabilities of loans that we have, how can that debt be reduced? Thirdly, as I said, the timing of the inflows and the outflows is very critical in today's time. And what is today's time? The theme is survival. So what is survival? I think everybody knows what is survival, but I'm just putting some elements of what I consider in these times as survival. Again, elementary and simple, but I'm just listing it out. According to me, aligning the costs that we have with the reduced revenue is one of the elements of survival. Prioritizing and aligning the cash inflows and outflows is another element. Tightening the working capital cycle, lining up temporary bridge funding, right-sizing operations to the new normal of revenue, and finally, what I call as the critical thing is to avoid bankruptcy and closure. These in all elements put together would constitute what we need to do to be surviving over the next 6 to 12 months. And what is the immediate goal of survival? If I have to put in one single thing, putting all this thing together is to balance the cash flow for the next 6 months, and you will survive. That is survival in the immediate goal of the next 6 months. And the longer term and ultimate goal of any organization is not just survive, but thrive, revive and thrive. And I would put that as to be a living and a growing company. And that is the ultimate goal for each one of us. I'll move to the next one. So what do we do in the next 6 to 18 months? And what does the next 6 to 18 months bring us? I'm not talking of the past, but I'm talking of the next 6 to 18 months. So if one looks at a three-dimensional view as what happens in the economy, what's going to happen in the economy is there is a revival of general economic and industrial activity, which is for sure, which is reflected by the GST collections in October, expected GST collection in November, the revival of a lot of industrial sectors, some sectors which are already at 95 to 100% of the level, the reforms that has been unleashed in the last 3-4 months, and in fact it's going to come in the next 3-4 months, much more granular details. The reforms of Atmanirbhar, we know that there are supposed to be 10 or 12 sectors which the Niti Aayog has identified as the new pillars of manufacturing boom in the country, and there's serious work that is happening. Liquidity-wise, there's ample liquidity available. I think today one thing is clear, though we may say that demand has not come back, I think liquidity is available in the general system because of the impact of the monetary stimulus. There is a pickup in inflation, and now inflation was benign, but I think going forward, there could be an inflation which might come in. Therefore, interest rates at the moment, according to me, are perhaps at the lowest level. We may not see further reduction in interest rates, but it could be perhaps stabilizing before it goes up. The GDP growth is a -9% in this year, based on Q1, Q2, Q3. I think it will be anywhere between 8 to 9% lower than the previous year. But there's a clear expectation that it will go up by 12% in 21-22. Corporate India is cutting cost, revival in infrastructure investments. So overall, what I feel in the next 6 to 18 months, the general economy in the country should be looking up. What's the commercial print sector saying? Certainly, I think the commercial print sector at the moment is struggling. And I know that I've read some reports which came in Print Week also last week, and maybe other things, that the commercial print sector is still perhaps at 30, 40, 50, 60%, depending upon individual companies or what of the pre-COVID revenue levels are. There is a behavior shift of print buyers, but I believe that the new normal of revenue, and I would come to that by way of some amount of slightly detailed work that our team has done. I would say that perhaps by March 21, we will be at 80% levels of pre-COVID revenues. There will be consolidation of print capacities for sure, and there would be some amount of some bankruptcies, but the consolidation may be for the good for the overall industry. Fight for survival and revival, and focus actually clearly on the emerging print segments, packaging, e-commerce, and the new print segments, which I will cover a little more in detail in the further slides. This is as far as commercial print sector is concerned. But what happens to your own company? I think that's what I think each one says, Marusu. So what does it mean for my own company? I think what the next 6 months would be to align the cash flow and keep the head above water. I think that's clearly the priority. We also use this current adversity to right size the organization and to be fit for the future. More than before fit to the future, we arrive at the right size that and arrive at a lower break even than what it was before, the new break even. Restructure, digitize, and be fit for the future. I think that's what the next 6 to 18 months will be. Focus on the new print segments, and obviously to address those new print segments, I think the building of new capabilities. So this is what the focus for your own company would be. So what is to be done on revenue? I think again, very simple, commonsensical thing, but I'm just putting a list of it. We prepare the next 6 to 12 months forecast in terms of what the revenues would be based on recurring revenue and the one-off event-based revenue. More very specific would be the volume price decisions that one will be taking, whether we want to take that volume at this lower price, whether I should reduce the price and take that volume to fill up the capacity. That sort of decisions would be one of the key factors to discuss and decide. Also is that when we have excess capacity, collaborative work with other printers and peers to share the capacity so that we find that capacity utilization can be increased. Analysis, which is very important, of the voice of customers of the new emerging print segments. I think that is very, very important to say, how do we actually build the new organization to the new emerging print segments that will likely to come. Another important thing which I believe we should be hearing the voice of customers of the new manufacturing investment that will come in. At the current moment, I think what government sources tell that there are 36 multinational companies which are being at a very good stage of moving out of China to India. That's what the government is very actively wooing. 36 specific companies, multinational companies, 10 big industrial sectors which has got production linked incentive to do, like the auto ancillary, the pharma business, the APIs, the specialty chemicals, the telecoms, even the textiles. There are such sectors. So what one would like to do in that is to actually analyze as to what is required by those emerging new customers, and thereby build the capabilities and capacities for that new business revenue. So this is a quick listing that I've done on what can be done on revenues. What is to be done on costs? I think again, while we focus on the revenue, what we can focus within. As I mentioned, I think knowing your cost is the first step. I'm sure everybody knows it, but I'm just trying to emphasize on the fact that do we know what is a variable component of the cost? Do we know the fixed component of the cost and the difference between the two? We right size the cost to the new normal of revenue. And one of the key important things that we need to do is, if the new normal of revenue is 80% of the pre-COVID, is the fixed cost lower than 80%? Is a new fixed cost lower than 80 or 75%? Because then only the company can break even and make money. So I think very clearly to know how much to right size and what all to right size. Convert as much of fixed cost to variable. Again, a fundamental statement. I think we will need variabilization of cost because revenue also is going to be variable. Revenue is not necessarily going to be a fixed one which will come month after month. So variabilizing as much fixed cost as possible, I think, is another very, very key aspect that we can do on the cost. Reduce the cost through replacement. Obviously, if we have a higher cost location, whether factory, whether offices, to move it through a lower cost, lower rental place is obviously a thing that we can do in terms of replacement, or even something that we are doing in-house, it goes totally outsourced, out-house. Implementing the restructuring, delayering of roles, and digitization of all processes. Again, very, very key things required to be fit for the future. And what I call as the legacy. I think this COVID has caused a huge pain. It is real adversity, but I think we have to use the adversity as an opportunity. And what can we do? I think this is a classic moment where all the legacy, whether it's behavior, whether it's mindset, or the legacy cost will have to be shed. And I think this is a real watershed moment in terms of in the lifelong life cycle of our business. I think this is a year where we can say we can shed the legacy. Doing all that, we bring down the break even. I think if we lower the variable and fixed cost, lower is the break even and higher the margin of safety. So I think this is a quick listing on what can be done on cost. What is to be done on assets? I think very clearly those assets we have ownership. I think we have to seriously look whether ownership can be converted to an outsourcing or rental model. A CapEx model to an OpEx model, I think is perhaps at this moment of time to actually de-risk the level of your assets and the level of debt. Improving capacity utilization by collaborating with other printers, as I mentioned earlier. Rationalizing the capacity by mothballing some assets or selling some of the underutilized assets. I think this is something that's a very key decision in your overall organization. We mothball or we actually dispose of. Move plant from city to tier 2 or tier 3 print clusters, because the new segments and the new factories and the new packaging units will be in those tier 2, tier 3. And therefore, moving plant from city to tier 2, I think is one of the key aspects of on the asset side. And we use all those to actually convert asset very much whatever we can do, partly to cash to reduce debt. What can be done for funding? I think we talked of revenue, we talk of costs, we talk of assets. What do we do on funding? I think in the current MSME scheme of 3 lakh crore credit guarantee is a fantastic one for us. Collateral free loans available up to 20% of the existing loans under the current credit guarantee scheme. So if we today have a 5 crore loan in our books, we are eligible for 1 crore more collateral free loans. I think that's something which most of the printers, if they have not utilized it, we should utilize this. It is available at 9.5% or less than 9.5% with a 1-year moratorium and a 4-year repayment plan. In additional loan, on top of this collateral free loans is available between 9.5% to 12% from PSUs and private banks based on credit assessment. I'm sure all of you would have registered under MSME. The MSME definition has been broadened. And if they have not registered, I think we should very much register. Every printer should register to ensure that the benefits are taken. Forex loans are available today at LIBOR plus 70 basis point. I would not advise people to take pure loan without any hedge. But even with a cost of hedge today, effective cost is somewhere between 5.5% to 6%. So if at all you have any loans, I think you can again negotiate with your bankers and all, or close the current loan and go for this LIBOR plus 70 basis point with an effective cost of 5.5% to 6% on Forex loans with full hedge. So overall, the sense of this is line up finance for working capital and assets, because we will need this bridge funding to tide over the current mismatch. So what I have done in terms of these 4 points, I am now trying to say that how do we manage the overall fiscal health? And these are some of the points that I've just listed out. I think, as I mentioned earlier, you have been partly doing it, we're fully doing it. This is just a listing. Maybe you could use this to tick out and say, this is what I have done, this is I may need to do. What I would prescribe is not look at one variable. It is an holistic and an integrated approach that is recommended. This will be to measure, monitor, manage, and maximize these variables. So the approach is 4M approach: measure, monitor, manage, and maximize this variable. What are these variables? So I am just listing out some of the little more detailing in each one. So if you go to the revenue, what are the things that I would look at and actually look at is what was the pre-COVID level of revenue? What is it last month? What is it next month? What will it be in December? What it will be in March? And is it going up month after month after month? That is a good indicator to say, I am actually on the road from survival to revival. What is a percentage of the recurring revenue and the one-off revenue? What is the impact of price on the capacity utilization and break even? I think one of the immediate steps that people will be doing is to lower the price and fill up the capacity. I think that's a traditional, a very clear approach that one does to ensure that we get the market share and capacity. But we need to see the impact on the price in terms of the break even and to say whether it's a correct trade-off. Variable cost, I think as a percentage of sale, is it going up or down? I think that's something that we have to monitor month by month. What needs to be done to bring stability and reduction to the variable cost in the short and medium term? So do we need to do something? Do we need to enter into a one-year contract with some vendor or with some overseas vendor or so to ensure stability in pricing and not have any volatility? So those are the things that we need to do in the variable cost. Obviously, we want to do between vendor 1 and vendor 2 and vendor 3 to compare what's the best, cost in use, not just the price, but the cost in use. Is your current input cost exposed to volatility of demand and supply and the global trade shocks, that because China is closed or China has this thing, some amount of items doesn't come there, and therefore your input cost and your supply chain should not be exposed to the volatility of that. And these are the things that I would look in the variable cost. What would I look in the fixed cost? I would look the following things. Is the fixed cost right sized to a level below the drop in the revenue? So if the revenue has dropped by 20%, is my fixed cost dropping by 30%? That's what the right sizing will be, at least at a minimal level. How much have we converted the fixed cost to variable, or how much have we eliminated? And actually, what would be one of the fundamental things that we should do in terms of in the actual plant is there must be more machines, older ones and newer ones. I think we need to make a serious evaluation of what we call as a total cost of ownership of running an old line, running a new machine, and really finding that we do that numbers and take a decision of perhaps disposing of some. And I think in terms of the capacity utilization that will come in, I will come into the new slide, next slides. I think I will talk about that a little more. Arising out of the revenue, the pricing and the variable and fixed cost is a break even. And I strongly appeal that every member should be monitoring the monthly effect of the price, variable cost and fixed cost on your break-even value. And I think you should target what should be the new break-even value or the volumes for your unit. This is what is the full effect of the right sizing of cost and your variable cost. What will be the new break-even value? Is this break-even value coming down month after month as per your plan? I think that's something that we need to monitor. Working capital, is this going up or going down in absolute numbers? I think it's very, very much necessary to look at it. Is this being right size pro rata or proportionately to the new normal of revenue? Obviously, while we have had lesser amount of revenue, the working capital was higher. So therefore, in terms of number of days, it would have gone up. But the last 3, 4, 5 months and the next 3, 6 months, we should bring this down very, very consciously and right size the working capital in proportion to the new normal. That will release that much amount of cash. Another element within the working capital is monitoring the aging above 90 days. Very critical is the security of the debtors, which I had covered in my last webinar. I think how much of the debtors are secured, and a move towards securing as much of debtors as possible through whatever terms. Even a rudimentary thing like a post-dated check or a LC is obviously a tough one to get, but how much of the debtors can be secured, and even credit risk insurance, which I talked of earlier. These are the things that we should look at. And obviously a general thing is to tighten the credit terms. So these are things on working capital, and these are some things that we can do on the short-term to long-term debt. As I mentioned, have you lined up the additional credit line as per the MSM schemes? Have you reset your repayment schedule and other terms with the banks, and monitoring your drawing power? I think these are some things I would put as a checklist for short-term to long-term debt. On the fixed asset, I think monitoring the capacity utilization of each of your machines. You might have a situation where you're using 3 machines. Instead of 1 machine, 3 machines are being running at 30% utilization each. And what should you do therefore to rationalize capacity? If your new normal of the demand is not going to be 100% of your current capacity utilization, then which machines and what we should do of those machines is a serious decision that you should do through some working. What is a book value and resale value of the assets? I think is something that you should look at and really zero in on that. What is a land building value and the other productive assets value? So the land and building value perhaps could be, either sold or leased out, and you could move to a rented place so that you could unlock some of your capital if you find that that's something that is needed. That's what, can you operate on an OPEX model or an outsource model versus an owned model? And therefore, based on all that, to decide to sell part of the assets if the debt level is high. So these are some of the things on fixed assets that one should clearly look at. Finally, balancing all of it put together, it comes to your cash flow. And I would again strongly recommend that every company should have a rolling 3-month cash flow forecast. You might prepare a 12-month forecast, but a rolling 3-month cash flow forecast is very much required for us to have a view in terms of balancing the cash flow situation. And again, within that, prioritizing the outflows based on the rolling inflows. Of course, you have to meet your commitments, because based on your commitments will be the confidence level of doing business with all your stakeholders. So once you prioritize the outflow and have a revised rolling forecast, then you honor the commitments. Be in regular touch with key customers, key vendors, and bankers, so that if any of these fellows are having problem in their business, and that may come into your business. So therefore, be in regular touch with what is happening at key customers, vendors, and bankers, and keep a close watch on the timing of inflows and outflows. So this is what I had actually put as managing the fiscal health of based on all these points. And maybe at the end of the call, if there are any specific questions on that, I would take that. Based on all that, what I've called as a survival revival table. This is nothing else but putting all of it in a format, and which is like a dashboard, and which if you keep it in front of your office desk or wherever you have, I think it would be a very good reminder for us to really monitor it and manage it the way that we want. So what are those indicators? We could go many indicators more, but I have just put something like 8 or 10 of them. So what is the revenue level as a percentage of pre-COVID? What is the percentage of revenue from new segments? What is a variable cost as a percentage of revenue? Fixed cost as a percentage of revenue? The headcount of your organization? Assets capacity utilization? Gross working capital in number of days? Space utilization in terms of whatever square feet that you're utilizing on your rented one or your owned one. What is the long-term debt and the short-term debt? So all this, if you can put this as what I call as the survival revival table, and you prepare a table that where are we on September 20 and where would we want to be in March 21. This is the next 6 months short term. Along with that, a medium term, which is the next whole year. And then the long term, which is the next 3 to 5 years. So if I'm sure this is being done by you, but I would not like this to be an accounting exercise. This is a management exercise. This is not financial accounting or what we call as a chartered accountant's thing. This has to be done by the entrepreneur and by the owner to say, this is the direction of a short term, medium term, and a long term in terms of our survival to revival table key metrics. So arising from this is what I call as an integrated, holistic fiscal meter. What do? We measure, monitor, manage, and maximize these variables. 4M. What are those variables? Again, the same one. The revenue level, the break-even, as a percentage of revenue, is it coming down because of whatever you have done on the fixed cost? The working capital cycle in number of days, is it coming down? Is it going up? Is it remaining the same in absolute and number of days? The level of debt, is it going up disproportionately? Is it under control on a month-to-month basis? The fixed assets capacity utilization month on month, and the personnel cost, because that's a bigger portion of the total cost. I put these measures. You could take some more. And if we measure, monitor, manage, and maximize this variable, I'm sure that most of us would come to a situation. What would be the outcome of this? The outcome of this is there could be a temporary mismatch. And I look at this as a scenario where there is a temporary mismatch. I understand that the level of business has not come up. So therefore, what we can do on other ones, if the revenue level has not come up, can we do anything on break even? Can we do on working capital? Can we do on the debt? Can we do on some capacity utilization or sale of the fixed assets? Can we do on personal cost? So it is not just based on one revenue level. I'm looking at an holistic approach. If one cannot be changed in the short term, at least other 4 or 5 can be changed. If 2 cannot be changed, at least the 4 or 5 can be changed. Then I would say based on that, if you do so, most of the businesses, according to me, will be a temporary mismatch. We restructure, it is required, innovate, and then of course the word is not survival, it is thrival. There is a second scenario where the setback is little more. It's not just a temporary mismatch, it is a little setback. And that setback will put you back on your net worth or whatever else. But we restructure more. If it's a little bigger setback, the restructuring has to be more. Contingency plan has to be made little more. We fight it out for a longer period, but bounce back. We bounce back because the demand will come back. I think definitely, according to me, it will come back to 80% of the normal, but there should be new segments which should be opening up. So the overall value of the business will certainly be there, very much there. If we bounce back with this restructuring, I think we are in the game to actually on the thrival. However, if we find that we are at a situation where there is a high, the break-even level is high. It is not the revenue level, the break-even itself is high, and you don't have much chance to actually reduce the break-even. Or if there's a high level of debt already, I think then in that some cases, I would not recommend it, but in the extreme cases, I would say, if you find that even extending this next 6 to 12 months is something that is going to create a higher amount of debt, then maybe to cut losses and exit would be an option. But I would not recommend it. I would say the scenario 1 and scenario 2 is what most of the commercial printers should be focusing on. So this is according to the integrated fiscal meter. And this is what is, therefore, I would put as a focus areas for the owners or the CEOs. I think we're all doing a lot of things on operational front, a lot of things that we are doing on strategic front. But what are we doing? And I'm sure this is something that all of you are doing. But I'm just listing it out on what can we do on the revenue normalization in terms of contracts that we can sign with customers for a little longer period, whatever else that we can do on revenue normalization. Voice of customers of the new print segment so that we are ready in terms of actually handling the new print segments as the opportunity comes in. Right sizing of the current business, I think, is a very fundamental thing that we have to do. And I think this is the chance for us to right size, because I don't think you will get any other bigger chance to right size than the current crisis. So right sizing of current business. When I say right sizing of current business, it is the P&L part, the revenue, the cost part. When I talk of de-risking of current business, it is more of the balance sheet part, security in terms of the debt levels, in terms of the, the aging part of it, the quality part of it, whether you're secured in terms of fixed assets, current assets. I think the de-risking of the current business is another focus area that the print owners and CEOs will have to do in the next 6 to 8 months. And then most importantly, building the new capabilities and capacities to be fit for the future. So there is a new capability, there is a new market, new print segments will come in. So can we build those new capacities and capabilities fit for the future? And finally, converting all of it into a financial roadmap with contingency plan for the next 6, 12 to 24 months at least. And then of course, we can make a 3 to 5 year plan as we go along. But at least this 6 to 12 to 24 months plan should be a rolling plan, not once that we have made. I think considering all the situations, a rolling plan of the next every 3 months in the next 2 years, I think is something that every print owner and the CEO should be focusing on. So this is what I've left it as what we call as the financial part of it. I have something next 4 or 5 slides here. I think I might walk in a little more faster here. This is linked to what we believe from the company level. We had put up some sort of a survey, and we believe that the packaging, newspapers, commercial and publication, there is a certain element of what we call as a behavior pattern. The short term, I think we've already seen. The long term, I would say in packaging is definitely a sector, and there are many people within the team who are sitting who are more experts on the sector. So I don't want to go into that, but clearly India will emerge as a manufacturing hub. The hygiene and health sectors will be growth. the e-commerce plus brick and mortar. It is not a question of only e-commerce. I think there is a considerable amount of discussion on this, that are we turning fully digital? I think digital has great convenience, but I think also physical has also advantages. So the conversion, what you call as the congruence of the physical and the digital is what is going to be there as what some people call as phygital. Newspapers, I think credibility and convenience is still there. Digital monetization issues are there. And therefore we see overall based on that 80 to 85% recovery by April of next year. Commercial, I think, is a segment which you are very much aware of it. New segments will emerge. There will be short-term jobs. There will be shift in the pricing model, shift to upcountry. Publication will have a little bigger hit because there is going to be in terms of this, but the shift to digital is unlikely in primary and secondary education. At the same time, you also find that there is a sharp, significant shift to digital in the short term, but there will be a fatigue of digital, which is being experienced. And therefore, higher education may have a combination of both digital and physical, as I mentioned. So this is some of the behavior patterns. I don't want to spend too much time. You would be aware, but in case we have something we can, maybe in a specific group, we can talk about this. Based on that, what we look at the large newspapers, the impact is medium. By March 21, circulation will be 75%, ad revenues will be 80%. Medium-sized newspapers, 90% and 85%. Commercial printing, we believe the impact is medium. Markets will recover, except structural damage in few pockets. Packaging, rigid and flexible, will be a low impact and high demand because of food, pharma, and essential goods. Publications, the impact would be medium. So this is what we believe that what the what the situation and scenario will be by March 21. This is one indicator which we have done some detailed work, maybe of some help. What we think is the general commercial printing would have 15 to 20% of demand destruction. Some part will go down, but e-commerce and packaging will add growth to this. So what we had done is we had made a list of variety of segments within commercial, right from textile, retail, label, brochures, everything. And we had categorized it into green zone, which we believe will come back almost to normalcy. Containment zone, which will come back to maybe 90% or 85%. And some red zone, which will be perhaps at 75%. So we had put these various categories, and I think this is something which could be a very useful one for us to take up in a discussion a little more in detail. I don't want to rush in, but this is just to say that based on the survey that was done by our in-house team, if you look at out of a total 100, based on green, containment, and red zone segments, different things, including diaries and coffee table books and visiting cards and hyper-local advertisings, government periodicals and books, 66% is in green zone, which will come back to almost 90%. So the 59 indicates 90% of 66. Containment zone is 15%, which will perhaps come down to 80%. That's 11 out of 15. And the red zone, 19%, which will come to perhaps 70%. That is 12 out of 19. So if you add up the total in the general commercial printing, we will have 82 to 85%, which is what this survey indicates that by March 21, the total of the jobs in the commercial segment, the general commercial printing, 80 to 85% should come back. So this is something that I think we can take this up with the BMPA and other associations to really look at it. I think this is something very useful for every printer. And I'm sure the BMPA and AFMP will spend enough amount of time in survey to actually arrive that this can be further fine-tuned and rationalized. So this is one thing from our aspects. So what does it mean, key trends? I think variable data printing, customization. So these are things which I think are very clear. I don't want to get too much of this because this would be where we could have a separate webinar on these issues, I think by experts itself. But it's evident, growth in packaging, growth in e-commerce, label industry. These are the sections that will happen. I think the key is here, the print integration with web and the coexistence. And that's something that I think we could go into great details to see how we could do that. Print suppliers will be much closer to print buyers and their end users. So I think the shifting from the tier 1 to tier 2 and tier 3 cities. Innovations which can combine print with visual and other feel and touch mediums and coexistence. I think these are all something that are the trends, and the focus areas would be faster presses, reduce lead times, quality, waste reduction, and sustainability. I think these are the things that are the key trends that are evident there. What does it mean for the commercial print industry? I think we need to have a roadmap for future growth, short, medium, long term. Hybridization of print model for commercial and packaging and digital. I think this is something that's a very, very key, hybridization. And calibration of capacities, which I mentioned and talked of. Digitization of internal processes to improve the reach to print buyers through digital tools. This is another key. Collaborative efforts to best use each other's infrastructure, a cluster approach. And very important, reskilling of teams and reestablishing of internal processes. So this is something, some of the things, again, what does it mean for the commercial industry? What does Atmanirbhar actually mean for the commercial industry? I strongly believe that the government stimulus which has been done will drive the growth in the country. The backlash against China, or what I call as de-Chinization that is happening, will make India as a future one of the hubs, if not the only hub. And it will definitely help India to play a role in the global supply chain. The infra push that is going to be happening within the country will help India better service the global markets. This is not something that will happen in the next 6 months. I think these are things that will happen over the next 3 to 5 years. Relaxation of FDI norms, government's one window approval, government investments in print clusters, which I heard recently is something that in Maharashtra is happening in other states. So all these are things that are happening. And that would mean higher demand for print, new print segments to emerge. MNCs will use India as a print hub. Segments like electronic manufacturing, which already there's a big PLI that's been already started, whether it is automobiles, which is going to come in, almost 55,000 crore over the next 5 years is a PLI for auto ancillaries. The toy industry, the furniture, the textiles, these are all high print demand sectors. And therefore, once the industry moves in here, I think these are things that can be catered to. But obviously, the voice of customer of the emerging sectors will be different, not necessarily the same. So that's something that we need to build into our plan. But very clearly, print is still a preferred medium. I think the impact of the 5 senses of sight, feel, touch, and connect, I think we'll keep print still as a preferred medium. And it is not that the digitalization will kill the print industry. I think print will still survive and thrive, of course, in a much more efficient way. And therefore, I believe that the Atmanirbhar thing, plus whatever we do in terms of right sizing and restructuring and digitizing our company, I think we will, and of course, taking care of the short-term fiscal imbalance. I think along with all these things will help us to ensure that we would be there as a thriving industry, not just surviving in the years to come. So if I look at all these things, what I believe that in March 21, packaging will be 100% or even above. Commercial should come to 75 to 80% of the overall market. Newspapers will be 80%. Regional will be 90, and English will be about 70. CTP bureaus will be around 70%. Publications will be around 80%. And this is what I believe. I mean, this is our internal survey that this will keep on fine-tuning it every quarter to actually give a rolling forecast. But I believe that what I mentioned in terms of the right sizing and the restructuring, the digitization, and the integrated fiscal health meter check that we've put together, along with the preparing a fit for the future, for the new normal. I think if you do all these things over the next 6 to 12 months, very carefully monitored month after month, I believe that the industry, commercial industry, it is not an issue of survival. It will definitely be on the revival to thrival mode. Yes, will everybody sail through? Obviously, in any industry or any data that you will find, there will be some who will be left behind. And I sincerely wish and pray that everybody in the print sector does not come under that. They all be able to in the segment 1 or the segment 2. In what I said, 3 scenarios. Scenario 1, which will thrive. Scenario 2, they will bounce back. Scenario 3 is where perhaps has to exit. And I sincerely believe and pray that all of us come into either scenario 1 or scenario 2, not in scenario 3. So I just thought I will just leave my presentation right now with these words, and I just don't want to thrive. I just not want to just survive, but I want to thrive. So I just finished, I think, half an hour of what I had to do. So Mehul Bhai had to little rush in, but this is what my presentation right now is. And I am very happy to take any specific questions depending on whatever any from the participants. Thank you.
Thank you so much, RK. That was really brilliant, and you've given us a lot of ideas and a lot of thoughts that we need to ponder over and come back. I already have a lot of questions which have come in from our members who are attending. I'll take up these questions shortly, because one of the most important thing for printers, and more so for commercial printers, is going to be able to think beyond the traditional approach that we've had always. Some of our printers are already doing that, and to make this more relevant for all of us who are attending this seminar, I thought it would be appropriate if we have a couple of our print company owners talk about what they are doing different because of COVID, and how they are tackling this period may also give further insight and add to what you have said. So I'd like to invite in just now Ankul Nanavati. He's the director of Unique Printing Press. Ankul's been doing a lot of things differently ever since this lockdown has happened. Like most of us, he's a commercial printer who's been impacted, and like most of us, his biggest thing is that I need to survive and be there so that when the demand comes back, whether it is in March 2021 or it is in August 2021, I'm ready to tackle it. So over to Ankul. Ankul, you take over. Yeah.
Yeah. Good evening, everybody. And thank you, Mr. RK, for a fantastic presentation. I was fortunate to attend the one that you did in July. And I must say that it took a lot of points of what you said and it's helped me a lot. So I would suggest that all of our fellow printers should take and study his presentation very closely. Coming from the other side of the table where, you know, a lot of commercial printing presses are bleeding currently, I think we are all gladiators in the current pandemic, and all of us being here is actually saying that most of us have survived. So I think kudos to all our efforts that we're here and we want to thrive. So I'd like to begin with a little bit of a positive note that, you know, BMPA always says that long live print. And I think we should always remember that print isn't really going anywhere. I believe that we may have a temporary dip because of the impact of the pandemic, but I think the tactile feel of our industry will always keep us alive. So let's be extremely positive of no matter which space or what customers, commercial printing is definitely not going out the window. So we could be down, but we're definitely not out. You know, a lot of business gurus and consultants would right now suggest that we need to think out of the box and be innovative. Now, let's be very honest, not very easy to think out of the box when you're already mentally and financially down. And it's also more difficult to come up with innovative ideas. So I would say that, you know, the best thing for us to do is speak to your customers and just listen to what they need, maybe right now and going forward. And that will give us a definite direction of where you want to take your business. Just internalizing all the times and looking at your sales numbers are only going to depress us. The more we speak to people, I think it only gives us a lot of negativity. So I think the first thing we need to be is be extremely positive. I'll tell you what we've been doing at Unique. I've stopped reading the newspapers. I've stopped following a lot of information that is being thrown at us at social media or what's happening globally, the numbers, how down and how things have dipped. I've completely isolated myself from that kind of information flow. For an entrepreneur, it's very important to be self-motivated. So I'm reading a lot of motivational stuff to keep me up, because being at the head of the ship, if you're motivated, only then can your team be motivated. So I would say just stay extremely positive and focus on what your customers need. What we've been doing for the last couple of months is we've shifted our focus away from print and see how things can be done differently within the print business. So we've turned a lot to technology, and we've over the last 6-8 months launched a web to print platform that can help corporate customers actually streamline their indenting to fulfillment processes. So we have a platform called Get Quick Prints, and we were happy and thankful to Print Week to actually feature us. So we've come up with a platform that helps corporates streamline their completely end-to-end solution. Now, this is something that's got a lot of our customers extremely excited, and it's opening up a lot of doors for us. So what we plan to do for the next maybe 12, 18, and 24 months is go back to our existing customers, understand what they are looking at, because they're all working from home. So all the print processes that were happening on emails and manually happening in coordination between their offices, their courier agencies with their printers, we are taking it all online. Also, another thing that we realized that proprietary way of working is not going to be feasible. So we've also had a vendor module wherein we can add their other print vendors and suppliers onto the platform, because obviously they can't give us 100% of the business. So I suggest we need to be very, very open with things going forward, and just listen to your customers as to what they need in the future, and gear up your operations and realign, as RK said, and plan everything accordingly for the next 12, 18, and 24 months. And I'm saying that as we are talking a new language, we are going above the value proposition of just being a print partner, but we are adding a lot of value to their operations. So I would suggest that use all your everything that you may have had. For example, let's say someone has extra space. Go to your customer and say, I'll print and I'll store, give you free warehousing for a particular period of time. Use everything that is at your disposal to the benefit of your customer. And I'm sure if we are able to talk to a customer, not just a vendor, but as a partner, because we must try and appreciate that, we are going through tough times, and so is the customer. So if we can be a part of his team rather than just for someone who's looking for business, we have a better chance of cementing our relationship with customers in these difficult times. So, this is how we are taking things differently, and we are trying to build our capability and take it to the next level. Going forward on our platform, we are going to continuously adding more features which are going to help our customer automate various processes. And trust me, I'm not an innovator, and nor am I someone who can think out of the box very well. I only listen to my customers and come up with solutions. So your think tank should just be your customer. Don't pressurize yourself that if I can't innovate, I can't be a Elon Musk, or I can't be a Mark Zuckerberg. We don't need to be that. Let's just be great at what we do. Let's be great listeners, understand, talk to customers, and give them solutions. And I'm confident that going ahead, as RK said, if numbers and the markets come back, and if we are ready to cement our relationships closer to our customers, we will be able to thrive. So, I had about 5 minutes. I'm done faster, but I'm open to take questions if we have any.
Thank you. Thank you so much, Ankul. We will have questions for you, so just be there. I'm also going to now call in Ashutosh Agarwal of Purnima Printers, who's also a commercial printer and who's also been facing this storm called COVID, and has been doing things to ensure that his business remains relevant and that he's there to take care of the demand when it comes back, and he's already seeing results. So Ashutosh, over to you. Thank you.
Good evening, everybody. Thank you, Mehul, for the introduction. Thank you, Mr. Ramakrishnan, for that insightful talk. Very encouraging and a lot of inspiring things to take from your talk. Regarding us, we are a commercial printer in the commercial print area since the last 50 years, doing all kinds of stuff. Not focused on a particular vertical, but doing various things that customers come up with. Have been working with a lot of ad agencies in the past, but with a lot of direct clients of late. We started work in the middle of June, and we found ourselves on very shaky ground. not knowing where to look at. Everything was very dull and very bleak. But slowly but surely things started moving up. We had a lot of customers in retail, and retail was dead until end of July and August. And so a lot of our customers had absolutely no business. They were not even willing to talk. They were not open to discussing future prospects because they didn't know when the markets will open up and how malls will open and how the crowds will come back in. But slowly but surely, the malls did open up. The crowd started trickling in slowly, and our customers started, we started having inquiries, and they started converting, and we started, work slowly but surely. Over a period of last couple of months, things have improved in the retail sector, particularly with our customer segment. They've been doing pretty well. And with the December and Christmas and New Year season coming in, there is promised activity, a lot of stuff happening right now. With the other sectors, our customers were not as forthcoming in terms of business. We kept calling them, we were in touch. We did not do as such any email campaign or anything digital because we knew that we wanted to stay away from digital, not make them used to digital. From our side, we wanted to show them the power of physical print and what we can do physically. So we kept calling them, kept in touch, and we looked for opportunities, but many of them were not as welcoming. Some of them said, we have no work, our offices are closed, until we visit the office, no work can be given. What in the meantime we thought was, we called old customers who had not worked with us in the past 2, 3, 4 years. Some of them had changed ships. They were happy to receive a call from us, and they were welcoming. They said, okay, stay in touch, we'll give you some new work. So some of those relationships have fructified, some have not as well. So it's a mixed bag. It's an ongoing process. It's very difficult in these times to think out of the box. Like Ankul mentioned, it's difficult for all of us. We're all in the same boat. So to think new every day in the situation is not, definitely not easy. But we definitely, the one commitment I made to myself is, I will not give up. I will fight. I will fight. I will survive, and I will thrive. I mean, it may take 6 months, 8 months, or a year, but the idea is not to give up. Keep your neck out of the water as long as you possibly can. And to do that, what we did was, like Mr. RK said, we realigned the cost versus the revenue. That is the one major thing we started working on as soon as we started getting some business. Our revenues were at 20-30% initially, and slowly climbed to 50-60%. We are still at 60%, struggling to maintain that. But also at the same time, we have realigned the costs. We are also actively looking to pursue alternate revenue streams, identifying these verticals, the industries that can be approached, not rushing into other lucrative sectors such as packaging, because there is already a lot of competition, and we don't believe it's a forte to get into packaging. Commercial printing is our forte, and I'm sure we can turn it on. Thank you, Mehul.
Thank you so much, Ashutosh. We have a lot of questions that have come in. RK, I'll need you back.
Yes.
Okay. So we start with the questions in the order that they have come in. I was happy to hear Ashutosh and Ankul talk, and they are already doing some of the things that you've suggested. I think questions here will give more clarity. So this is from one Mr. Khandekar. He says, in times like this, which relationship in your view is most important? Customer, vendor, employee? He gives an example that most businesses have poor cash flow today because customer is not paying on time, based on the impact that their business has suffered, because of which they are not being able to pay on time. This leads to delayed payments to vendors and employees, which creates a strain on all relationships. So which is the one that should be focused on is the question that he's asking.
My answer is actually not which one within that. I think among all this, I think the topmost man in the company should have the accountability for maintaining relationship with all the stakeholders. Because in these tough times, I think it's a relationship that comes into play. I think everybody knows that everybody is under some amount of problem or other. I think appreciating each other's problem and still being able to meet the minimum commitments, I think comes out of the relationship. So I would say definitely customer, because the revenue comes from him. But I would write even banker, for example, relationship with a banker will be coming into great state today. Because I think if somebody needs a temporary overdraft of 10 lakhs, 15 lakh, 20 lakh, I think if you have an understanding with a banker to say, I'm going to survive, I need a temporary bridge finance for 1 year. And so therefore, if it's a relationship with the banker will help you to come out of this. So overall relationship is the topmost thing that I would say the CEO and the owner should be focusing on. And then of course, all other things. So, but customer, yes, I would say even banker.
Okay. So basically, it's about managing all relationships, whether it be with customer, whether it be with your bankers, whether it be with your employees. And I guess transparency in today's times will also help manage these relationships better.
Correct.
Right? Yep. We go to the next question. This is from Mr. Tushar Dote. He says for MSME guarantee loan is not given to cooperative bank account holders. This is in reference to what you had mentioned about the various schemes that the government has launched. So he feels that the people who have cooperative bank accounts and relationships with cooperative banks are not eligible for these schemes by the government. Can anything be done about this?
Yeah, so actually, Tushar, there are two schemes. One is with the what we call as the government's 3 lakh crore credit guarantee scheme. And second one is what the RBI has asked public sector banks, private sector banks, and even cooperative banks to actually lend. So I will check out, but according to me, the government 3 lakh crore MSME scheme should be, and if some cooperative bank is not able to give because of any specific problems, then I guess it's on the bank. But I believe that today any MSME should be able to get liquidity. So I will anyway specifically get back on the cooperative issue, but then I will recommend that then that case you will have to change to any public sector banks or even an NBFC. Because today, I think, let me put it this way, that what challenges are we facing? We are facing the challenge of demand. We are facing the challenge of liquidity. I think the government has opened the tap on liquidity. I can say to a great measure, the MSME scheme of liquidity of 3 lakh crore is being implemented at PSU level, at private sector bank level. I can tell you that I can approach 5 banks and get you a loan for less than 9.5% under the MSME guarantee, collateral free. But your specific question on cooperative, I think I will need to check with my finance, but I will be able to tell you that according to me, if that bank says no because of the restriction, then I would recommend that you should have another bank into that so that you can at least get the collateral free loan.
Okay, just adding to the question that Tushar asked, whilst those who are having accounts with the cooperative banks are finding it difficult, even those having relationships with nationalized banks, there seems to be a lot of gap between what the government is talking about and what actually the policy implementation is being done by the banks. Because the bankers are worried that during this time, whatever they are extending by way of credit to units which are already facing some kind of stress, they might not be technically NPAs or something like that, but they're already facing stress, are likely to become, stressed assets over a period of time. So they are creating obstacles in disbursing what should be an automatic thing given by the bank. Have you experienced any such thing?
Mehul, basically, I can say that I can let you 5 or 6 banks which are, I would say, disbursing it faster. Okay. So what I would do is I would collect the actual data of which banks are doing faster based on not my on TechNova's thing. I'm talking of a general MSME approach.
Right.
Okay. Right. And I will make a list of what is little more easier, what is little more tougher, and some things like that. And I will send it up to the BMPA. Okay. So that if depending upon the BMPA's customer client base, which banks we can perhaps shift to is something that the BMPA can give this as an information.
Thank you. Thank you. That would be really helpful. The next question we have is from Milap Shah. He says, can you please give some examples of converting fixed costs to variable?
Yeah, Milap, it's a good question. Actually, that is the, what I call as a real difficult one, but there are. For example, we have an approach to say rent used to be go down and warehouses rent used to be a fixed one, but no longer. I think there are people, service providers who say that you pay rent according to the area that you're using. So therefore, one of the examples that we are actively considering and doing is that wherever we have a distribution center, can we convert the fixed rental to a space utilization based on rental? So that's a variabilizing. So suppose, for example, we may need 25% of the space, the rental should automatically fall to 25 to 30% of what we may not be exactly 25%, but definitely not the fixed amount. So rent is one. Second one, I would say even people. I think this is a time to say that everybody is on a fixed salary. But if the current personnel cost is broken up into fixed and variable, and then clearly linkages as in these situations, only the fixed gets paid, the variable doesn't get paid, and increase the amount of the variable aspect of people's, those who have got a higher sales targets and things like that. So very quickly, I think we go through all the levels of personnel cost, the establishment cost, the rental cost. I think many of these things we can perhaps convert into partly variable, partly fixed. May not be everything variable.
Yeah. Milab, I'd like to add to RK's answer also. One of the other things that you can do is also to convert your existing equipment. Like if you have digital machines, instead of owning the digital machines, you can possibly look at selling those assets, creating money from that, and replacing them with rented equipment.
Leasing it back.
Yeah, leasing, because there are a lot of companies and a lot of private players who are also today leasing out machines for printers as far as digital is concerned. And even in offset, sometime back, I don't know, about a year back, year and a half back or something, even Heidelberg had come up with a scheme for offset machines, which where you could take a machine on rent basis the kind of volumes that you were able to commit. I don't know whether that still remains operational or not, but these are the kind of things that you could possibly do to make it a more operative model rather than a owned machines kind of thing. So if this helps, I'd be happy to discuss this with you offline also. Thanks so much. Next question is from Prakash Kanser. His question is, restructuring is a lot of asking for and can be very painful in the short and medium run. Also, there is no stability in raw material prices. This is creating a lot of problem in our working capital flow. So is there something that can be done to handle this issue?
So the two questions. One, you said restructuring is definitely a painful one.
Yeah.
I think, but I could say that this way, what best opportunity to execute a painful one other than this COVID period, because everybody knows that this is a painful process for everybody. So the pain can be the least when you actually do a restructuring during an adversity. So I would strongly say that, yes, I think we have a human approach to everything. It's not a ruthless sort of a mercenary approach, but there's also an occasion to say that we are right sizing because we want to keep the overall ship still floating. So in the overall ship has to float and to actually thrive, then maybe part of the load may have to be shed. So I think I don't see it's a moral approach right now. The restructuring, this is the best time to do so, even though painful. The answer to the second question, I think, yes, volatility is something that is there in the commodity and other price markets. So I don't know whether, for example, in paper and things like that, there are instruments for hedging. So I would say if whichever is a bigger component of your raw material, whether it is crude related or whether it is paper related, I think maybe items like BMPA and all, we're working on certain things related to, from a customer point of view, with the CRISIL rating and things like that. But we may approach CRISIL and some other agencies to actually see whether there could be some amount of what I call as hedging instruments available for paper and oil-based such products. And that can be perhaps using a mechanism on the MCX or somewhere else on the market, actually give you a stability of the price despite the actual volatility on a physical terms. So this is something which I need, maybe I will also investigate a little more in detail, which can be done. And based on that, I would essentially send like the list of the bankers. I will send that to you.
Yeah. Thank you, RK, for that. The next question is from Mr. Arvindan Badri Narayanan. He says, do you foresee a price war between fellow printers as demand remains subdued? Would not that be detrimental in the short and the long term both?
Absolutely. I think that's what I said, that people and printers would want to take a call that if you want to fill up capacity, you actually quote for the jobs at lower price. And this is a natural response from everybody when the size of the pie is lesser now. But I guess we will have to make a very clear decision, what I call as a trade-off. If you drop the price by 5% to 10%, what happens to your break-even? It doesn't mean that your break-even goes up by 10. It may go up by even 15%. So I would say this needs to be carefully calibrated. In the immediate thing, yes, this could happen. But I think that's something that I don't know whether the associations can bring in some sort of a, what I call as a general guidelines to say, yeah, if you're actually doing this, then you're actually not only spoiling your own thing, you're also spoiling our other brother printers. So easier said than done. but maybe some general guidelines, but more from an individual point of view, I would say that I can go up to this. I know this is my water line. I can't go below this. So I don't want, even if the business goes away, I don't want to touch this because it's below my water line.
Okay, thank you. The next question is more or less similar to what Prakash Kansar had asked. So Riddhi Pandya wants to know how to handle rising paper price and new payment terms from paper vendors. So this is the question that she's asking.
So yeah, I guess paper prices is what I meant by when I talked of the commodity thing. So the paper prices were remained lesser in the initial months of the COVID. Now it is perhaps risen because some capacities which have got shut. It's always a question of cyclical demand and supply. So if there is something that we can do structurally to handle this, I think that's something as a longer term solution that I'm sure AFMP and BMPA would work on. And as I said, if I can find out some mechanism to hedge it so that we smoothen out the price and instead of have spikes, that would be something that in the longer interest would be better. I think that's something that I would find out and then give my inputs to that. As regard to the credit terms, I guess everybody is tightening credit. So maybe you would want cash term, or you want, maybe if you could say instead of cash terms, you could give him secured payment terms that may give you extra credit, but you may have to give him security. So that's something that maybe depending upon what the terms are, you could renegotiate.
Thank you. And we are on to our last question. This is from Mr. Deepak Dhawan. You gave the current and future scenario in commercial and newspaper industry. What, according to you, would be the position of government printing presses, printing textbooks, etc., and their fund position?
Yeah, Deepak. So this is something, as the government's stated objective is to go digital, and the diaries and the coffee table books and all calendars have gone away. But I guess that the textbook printing would still continue to be still, because I think the education cannot be converted to fully digital right now. It will, more and more will happen, but I still see the government textbook printing to be a sizable thing. The government finances are not in a good position. So payment position would always be further compromised, and that depends upon each one's term with the respective agencies. But I would say the demand for government printing, because this year's the entire school season has gone for a toss. So all the book printing actually has not happened. So I foresee a higher amount of book printing in 21-22, but we have to see what is the finance position. Each state government's finance position depends upon their fiscal health. But I would say demand would be there in 21-22 of government book printing.
Thank you, RK. We just one question was added, so we'll take that as the last one. The gentleman has not, or the lady has not provided their name. They're asking, besides demand picking up, which will help sales in long term, would the focus on R&D and offers of innovative products help in revive markets?
Certainly. One of the things that Mehul Bhai has said is, I see a big thing coming in from the new industry shift coming away from China to India. But right, those will not, there are 36 MNC companies which the government is zeroing in to woo them and bring them. Right. Like Apple, for example, has already shifted some of the things. There are going to be other companies which are going to come in. So these companies are not going to be the plain vanilla requirement. This will require print embellishment. This will require value-added services. This will require, like how Ankul mentioned about looking at a partnering way, whether the vendor managed inventory can be provided with a printer. Yeah. These are the things that need to be done. So product innovation and service innovation, both will be required. But I think if the business comes in and sizable, if you do this, I'm sure that will be a great revival in terms of as compared to the current date.
Right. Thank you so much, RK. This was a brilliant session. All the questions have also been answered. As usual, whatever you've shared with us, there's a lot that we as print company owners need to think of. We would request you to send us your presentation, and particularly those formats which you think will help the CEOs stroke owners of print companies to monitor their company's health. BMPA would like to circulate that to our members and to the attendees to today's webinar so that they can continue to monitor their revival. Thank you so much, RK, as usual. Very, very brilliant. I would now like to hand over to Fahim for the vote of thanks to everybody who was present here, and also for the next plan that the BMPA has for its webinar series. Thank you.
Thank you, Mehul Bhai. Before Fahim takes, I just want to make a mention that the formats that I had prepared, if it is I think very important for each individual printer
Yeah.
to put his or own actual status into that format and monitor it. It will be of great help. And if there is something that I can be of help in any specific printers wanting to infer from what this data,
yeah,
they're welcome.
Thank you, RK. That's very kind of you. What we will do is we will collate everything at BMPA and forward it to you so that you can sit and answer it and send it back to us, and then we'll disseminate that to our members. So that way, we don't flood your inbox with too many mails and stuff.
Absolutely.
Like yeah. Thank you. Over to you, Fahim.
Thank you, RK. Brilliant as usual. Always willing to help the industry with your knowledge and your sharing. I'd like to thank Siegwerk, who are our knowledge partners for today's event, specifically Dr. Raghav for his presentation, TechNova and RK, Ashutosh from Purnima Printers, Ankul from Unique Printers, and Mehul from Mail Order Solutions. Thank you all for working as a team and providing this lovely presentation to us. Our next series, which will be called Impact Series, is on the 22nd of December. So I request you all to make a note of it. 22nd December, there is a session on the new labor reforms and policy which is coming up. Huge changes in the offing, and we need to understand. It will take a couple of sessions to really understand what are the impact on our industry. But let's kick it off on the 22nd of December, wherein we will understand what the changes are, the broad overview. So thank you, gentlemen, all, specifically all the people who have attended, and I hope you have a good evening. Thank you very much.
Thank you.
Thank you.
Thank you.